We, the people who works in the finance area, are very much familiar with the terms stocks, shares, share market, stock exchange. Let's know what stocks is. Stock signifies ownership. If someone has a stock of a company, then he become a owner of that company. He is now sharing the ownership of that company. Let's suppose I have a stock of SBI. Then I am a owner of the SBI. I am also sharing the ownership of SBI. Yes, my ownership may be very less, maybe 0.0001%, but still I am owner of SBI. I am sharing the ownership. That's why sometimes stock is also known as share. Now we all know that stock or share means having ownership of a certain company or sharing the ownership. In this case, if the company profit, then uh, then we will get the profit of the stocks. If company loss, then we have to bear the loss also, because we are also owners of the company, so we can't complain. Now now the question arises, why these big companies sells their stocks or share to common people or other companies? To understand this, let's take an example. I will explain the example of what is attached in the video. Let's suppose I have a company. I'm the founder member of the company, a small company, a small bookstore, which has current valuation is 1,000 rupees. Now the bookstore is running well, so I want to expand the bookstore. Maybe I want to uh, bring new books or some other items. For this I calculated I need more 300 rupees money. But at this moment I have no money in my hand. I have zero money in my pocket. So what is the available option to me? One option is I can take loan from private private or government bank or any private individuals. But if I take loan, maybe private individual or private bank or government bank, then I have to repay the loan with interest. Even if I do loss in my business, even I become bankrupt also, then also I repay the loan by selling my assets, maybe the furniture, the furnitures of my bookstore need to be sold, and then I have to repay the loan. I cannot escape. So what is the best option to get this 300 rupees money? So I decided I have my bookstore has valuation at 1,000 rupees. I need 300 rupees. So I need to sell 30% of my company's ownership. If I divided 3,000 by 300 by 1,000, then it's 30%. So what I did here, I divided my whole company or bookstore valuation into 100 equal parts, and this all equal parts is known as one share. One is known one share. Why I divided it? I I do not know that this 30%, that 300 rupees I can get from one person, or I need to ask from multiple person. Because if I have surety that to get I will get it from one person, there is no problem. But if I um, to get it from multiple person, and I don't know exactly from whom I will get, so I decided this. Yes, I divided the whole of my valuation in 100 equal parts, and so each equal parts value come under 1000 divided by 100 is 10. This all equal parts is known as stocks. So all stocks or share value become 10. So now I have total 100 stocks, and 30% means I need to sell 30 stocks. And these 30 stocks can be bought by one individual person, and maybe 30%, max 30% can buy. And the person will get the ownership equivalent to his share. Like if a person have one share, here the 1% ownership. If the person has 30 shares, here the 30% ownership. So I sell my 30% ownership, and I get 300 rupees. So what is the benefit I get from here? Benefit is that I do not apply for loan. I did not require to take a loan from bank or any other person. So I don't have obligation that I need to repay the loan. Here, even if I do loss in business, I do not require to repay the loan of this 300, because 300, the people who gave me the 300, they are also now become owner of my company, like the bookstore. So if the bookstore profit, they will get the profit of the share of the profit also. But in that time, if the bookstore loss, they'll also lose they have to bear the loss also. So this is the benefit of mine. That is, I hate my loss. Means I decide that I do not require to pay the additional money what I have taken from public in case of my loss. Yes, if the profit is there, I need to share the profit to them. But these 300 rupees I get, the additional money I get, without any obligation or any contract that I need to repay it. I can use this money to prosper, to increase my business, or even I can use this money to other business also. But here, the 30% shareholder consent also matters. They have the rights, voting rights to make voting rights in company decision. So they have also power to direct the company. But in my case, means company's perspective, the founding members' perspective, what happened? I earlier I had 100% ownership. Now I have 70% ownership, and 30% is for public ownership. But benefit what I get, I have got 300 extra money to expand my business, and for which I do not have any obligation to repay the money. In return, the public who bought the share 30%, they are become the owner of the who bought the share of this 30% share, they become the owner of my companies, and they have the equal rights in the company equivalent to the share number of shares they hold. So this is the entire concept of uh, company issuing share to the public. That is earning additional money from public, or additional money from public or other institution, other company, by selling their own share. And this money did not to require to repay in case of loss. So here company getting expanded because by this additional money they received, business get expanded, but there is no obligation to repay money, because this money has come from the shareholder, not from any bank or any others. It is not a loan or anything. It is from the shareholders' contribution. So I think now it is clear what is stock or share and why company issues share. We'll discuss the other terms like stock exchange and other different type of stock like bonds and other components involved in the stock market, like like depository, custodian, clearinghouse, broker, investors, all in later.